Hey traders, Todd Gordon here with TradingAnalysis.com. This is for CNBC's Trading Nation. Traders, we're going to take a look at this pullback in the semis. They are approaching technical support and a quite high implied volatility market here, and we still have a ways to go before we hit earnings season. So first thing I want to do is take a look at the daily chart of Nvidia. We've seen this nice three-wave pullback here, which is great. So let's go back to the most recent significant correction, which I see a good one here in February, and this was actually after Q1 earnings. So let's just take a quick distance traveled right there. I'm going to copy this line and then project the depth of that correction off the ongoing correction and take a look at what you see. We are right on top of the equality point. So basically this distance right here is equal to the prior correction. You see this kind of symmetry in the markets all the time. If you just know how to look for it, you can pick up some pretty good turning points. So we're at some pretty decent support based on our prior February correction. On top of that, guys, if I take this little trend line and let's just take a little snapshot of this distance traveled here, I'm going to copy this line, project it off the top of the little swing right here. That's going to project support just a little bit lower into the 136. So altogether, we have support from prior swings forming right around the 140 to 135 area in Nvidia. This is technical support based on what the market's done in the past. If we look down at the implied volatility, as I mentioned, we're seeing a pretty good move up or ramp up in implied volatility heading into earnings. And this is very typical of Nvidia and other stocks heading into earnings. So here's the implied volatility ramp prior to the last earnings. This is the move up into February earnings. Here's the move up into May earnings. And then here we are on the approach to August earnings. We're seeing that move up in implied volatility. We can use that to our advantage. So bottom line, I want to be long Nvidia in a high implied volatility environment with support identified from 140 to 135. I'm going to go over to the trade tab. I'm going to be selling puts in that high implied volatility environment. As implied volatility comes out, and stocks will do that heading into earnings. We'll see the implied volatility move up, but then as earnings get closer, you actually see the market back away in terms of expected movement. We're going to use that to our advantage. So we're going to go ahead and sell the 140 put, which is just below the current market. I'm going to pair that up with a purchase of the 135, which is going to cap the risk. We're going to take in right now $2.04, which is $204 per option contract. That is our max profit up here. If you take a look at this purple figure right here, that's $204 that we're going to put in our pocket and hopefully keep right now. If the stock begins to move lower, we will begin to lose money in this trade right around $137.80. And if we're absolutely wrong and this market just tanks, we face a max loss of $296. Okay, that's the trade. We're going to set this to work. Okay, perfect. Now, if the stock were to break through that $135 support level, trade is wrong. Let's get out of that put spread, maintain any remaining premium, contain the risk, and simply move on to the next trade. Otherwise, that's the setup in Nvidia. For CNBC's Trading Nation, I'm Todd Gordon. Good luck in that trade. Be sure to follow us at Trading Nation for updates to this position as well as all the other trades our traders are watching. And we'll see you guys in the next video update.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.